I've just gone and made the biggest changes to my Trading 212 portfolio ever, selling out completely of all these 4 positions, and reinvest the money into these 2 companies, which are Google and Amazon. I made a video yesterday explaining why I sold ASM out, as I believe it's currently now trading at a fair valuation, and I didn't really have time to build my position up to where I wanted it to be, as I only started investing into it around a month ago, and the stock price is up over 40% since. It doesn't really seem sustainable. I think looking at the fundamentals of the company, that the capital could be better allocated elsewhere. And then in addition to the other 3 companies, which are Microsoft, American Express and MasterCard, I think there are better opportunities in the market again. Now I do think all of these 3 companies are incredibly high quality, but as an investor, I'm currently in this stage of aggressive growth, and I want to allocate my capital in the best place where I believe I can receive the best return. That's why I put all my money into Google and Amazon. On face value, this may seem very risky, but because of my age and my investing tolerance, I believe this is the best decision I can make. And that's why at the end of the day, it's called personal finance, as it's personal to each individual. I invest all my money through a platform called Trading 212, as they offer a stocks ISA, which means all money that I make within my account is completely tax-free. And if you'd like to get started on Trading 212 yourself and receive a free share worth up to £100 when you deposit just £1, then sign up using the link in my bio. This is a limited time offer only, which does expire in 4 days. Now, Google itself has an incredible month up around 14%, and that's after it sold off a little bit. I still think in the long term this company is undervalued, and at the moment it may be trading around a fair valuation, but probably on the lower end. Then of course there is Amazon, which I think is currently a sleeping giant. Amazon are known for their e-commerce side of the business, but they also own things such as AWS and Prime Video. And AWS is currently the largest cloud computing service in the world. I do think that Amazon are going to be a company that you have to be patient with, as in the past 5 years the stock has only appreciated 40%, which is less than the S&P 500. But that is simply because they're optimizing for growth rather than profitability. And once they turn on the free cash flow machine, I believe this company will absolutely explode. Amazon isn't really a company you can look at in terms of the PE ratio, as they do look pricey, but that's simply because they're investing for growth. And most of the free cash flow goes towards capex. From an EV/EBITDA perspective, they trade at an 18.2 ratio. And this company still only has a market cap of 2.3 trillion, which is crazy to me, as I think this company should definitely at least be at a $3 trillion market cap. Call me crazy, but I would not be surprised within the next 5 years if Amazon has over a $4 trillion market cap, which is nearly double than the current stock price today.